Hello and welcome. You are watching Coin Monitor. This is Manoj Dara. So in today's episode, we are going to discuss all the reasons why Bitcoin has touched its all-time high for the second day on a trot. But before that, do like, share and subscribe to our channel and let's get started. So Bitcoin has smashed through its previous all-time high, soaring past $118,000 mark amid relentless demand from both investors and corporates. The driving force behind the historic milestone? A powerful combination of massive, sustained buying pressure meeting a tightly constrained supply. So over the past months alone, the Bitcoin ETFs have snapped up a staggering $5.2 billion worth of Bitcoin, signaling a significant institutional commitment to the asset class. The inflow from the ETFs reflects a broader trend of deepening interest from the big players, including corporations, who are acquiring Bitcoin in the record volumes. The math is simple yet striking. Let me explain this to you. So Bitcoin companies have purchased roughly around 160,000 Bitcoins in quarter two alone, equaling 100% of the new Bitcoin supply expected for the entire year. So just for your information, roughly around 450 Bitcoins are mined every day. So in other words, these buyers absorb all the fresh Bitcoin entering the market within just one quarter, leaving very little available for the other investors. So looking ahead, industry experts at Bitwise are bullish, projecting Bitcoin could reach $2 lakh mark by the year end. While this target may sound ambitious, the accelerating institutional flows and growing corporate adoptions make it increasingly plausible. So demand shows no signs of slowing down, and with supply firmly capped, prices are being pushed even higher. Let's listen in.
Most of us are 100% exposed to dollar-based assets. We're exposed to stocks, we're exposed to bonds, we earn our salary in dollars. If you look at the US debt and deficit, it's unsustainable. People need some exposure to an alternative. Bitcoin is the best of those alternatives. It's the fastest horse. I'm not telling my friends and family to put 50, 60, 70% of their portfolio into Bitcoin. But right now they're 100% dollars and 0% hard assets. I think having a few percentage points in Bitcoin, historically it's been good for returns. Historically it's had low correlations. I think it's a good investment bet, but it's also insurance against that fiat risk. I think it makes a lot of sense.
All right, so adding fuel to the rally is Congress that has kicked off a pivotal crypto week with hopes pinned on the key legislation like the Genius Stablecoin Act, which recently passed the Senate on a bipartisan basis. If the House follows suit and the bill reaches the president's desk, it could open the floodgates for the Wall Street's deeper engagement with the digital assets. Alongside this progress on the Clarity Act, a market structure bill would further strengthen crypto's regulatory foundations. So in short, Bitcoin's meteoric rise is powered by two driving forces: booming ETF flows and aggressive corporate buying, both intensified with the limited supply. As these forces continue to gain momentum, the path ahead looks bullish, with Bitcoin poised to redefine new heights in the months to come. That's all there is in this special segment. Keep watching 3.0 TV. Thank you.